economic news that came out this week that generally can move a market. And here we are in the beginning of September, and there's so much to talk about. You know, Danny started out with this jobs report. Of course, Friday morning, we did see that report and lots to talk about there.
Yeah, that was a really interesting report. Most people, I think, were really keyed in on the back month revision. So we got the August numbers, but along with that, they go back and they revise the June and July numbers. Thankfully, the revisions weren't as large as last time, but they were still negative. And in fact, they were so negative that the month of June, there's actually a decline in the number of payrolls. So we did actually get that negative number that some people were kind of thinking that maybe we'll get it, maybe we won't. But with positive 22,000, I think that the real key message here is that the private sector is kind of dribbling along. It's not necessarily declining into a recession, not showing any sort of rapid rebound or anything like that. People are really still dribbling along with the job growth. Wages, they were positive, and from an inflation-adjusted perspective, so even adjusting for any sort of adjustments to prices due to tariffs or whatever, that was still positive. So I would say that it was a disappointing, but it wasn't necessarily devastating to see.
But it was kind of expected, too.
It was, yeah.
So this ADP report as well, so we see these payroll reports. What we used to see was job hopping. Mm-hmm. Now we're seeing job hugging, and some of these things are back to pre-COVID numbers.
That's correct. Yeah, I love that, the hopping and the hugging, because we are in this situation where
the dribbling, the hopping, and the hugging.
I know.
Very nice job as an economist.
It's either a children's book or an economic.
That's right. Well, there's actually this great economics book where it's a comic book. It's a bunch of comics that were written. It's fantastic. I'll have to bring it in and show you guys it. But in terms of the ADP numbers, they give you the details about job switchers and job stayers. There's still a little bit of a premium to people who are switching jobs. I mean, if you kind of think about it, why would you switch a job unless there was more pay or some other reason? But that
you don't like your boss. That's usually the reason.
Well, that might be the case, right. Yeah, which is why that I think a lot of people like to look at where is that happening as well. Is it smaller businesses, mid-size, large? Right. They give you all that type of detail. But that premium to switching jobs is not completely gone, but it's back to more historical levels.
So we see this jobs number. It's got our attention, right? Number one. Number two, we see what's happening with the ISM, which is a measurement of the health of the economy, and it's still negative, but it was better than expected.
That's right. So the Institute of Supply Management, they ask a bunch of purchasing managers who are doing the procurement and all that other stuff about, are things getting better or are they getting worse? And then they create this diffusion index where anything above 50 suggests expansion, anything below 50 suggests contraction. Manufacturing is showing about 2 months in a row of a decline of economic activity. It did have a brief moment for a couple months where it was positive, but that was on the back of like 2 years of being in a recession. Right. Now, on the services side, that's where...
And which is important, because I wanted to make a distinction there from manufacturing to services, because this country is a services economy.
It really is. When you look at the consumer basket, the things that we purchase, the majority of it does tend to be services. And that can include like education, the cell phone service that you have, travel, leisure, hospitality. When you eat out, you do get some good in there as far as the food, but a lot of it is
Depends
the service.
Where you go.
That's true. And so the services, which is the bulk of economic activity, is still expanding, not at quite the same rapid pace as what it was. Now, within those surveys, it also tells us a lot about the inflation outlook. So not just economic activity, but also what should we expect with prices. Right. And they're saying that prices are increasing, which is just historically they do, but not at the same rapid pace as they used to. It does depend, of course, on the specific product, specific company.
You think about, for example, energy. Goldman Sachs has us at $55 a barrel for next year. So that's disinflationary. Why are we talking about all this economic news? Because it will lead into what the Federal Reserve is going to do in just a few weeks. Nearly 90% chance that they're going to lower rates, and the market generally will follow.
That's right. Yeah, what we saw after the release of the non-farm payroll number was that actually 2 rate cuts are on the table now. So a supersized
in
cut.
This year.
Well, actually for the month of September. So the market is pricing in a near certainty that they will cut on September 17th, and a 10%, so small probability that maybe we could see 50 basis points instead of 25. That's probably a stretch.
Yeah. It's probably 25 basis points in September.
Yep.
But maybe another rate cut yet in 2025. And why that's important, because it could start to accelerate the housing market, because, we talk about the housing market's 10% of that number, but it's much bigger than that because all of the things that go in the house, right? So it could be a significant addition into the economy. Folks, this is really the time to go through your portfolio because it's shifting right now, and your portfolio should shift with it as well. There's a way for us to help you with that.